Alright, we got a big week with Apple earnings and FOMC, so this should be a very exciting week, but we are at some very critical levels. So first up, let's take a look at a weekly chart of the SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, starting with the weekly chart of SPY, we can see that we did hit that critical resistance last week, which is this weekly level at SPY 407. And this is exactly where you need to be taking off risk if you're a bull, because it makes no sense to get bullish at resistance levels. So with today's price action, there should be no surprise that we saw profit taking and bears stepping into the market, and we are starting to see that pullback. So with FOMC this week and Apple, I do expect to see the entirety of this trading range. And right now the trading range brings us all the way down to the breakout level at SPY 395, all the way back up to the resistance at 407. So it's more than likely going to happen, and of course this is just my opinion, is that we are very likely going to retest that breakout, and then the bulls will try to make another attempt to break that resistance at SPY 407, and if they are successful, we will be looking for a retest of that breakout, and then we can start continuing to higher prices. So if you're just looking bigger picture, you have a trading range this week between SPY 395 and 407, with the bear breakdown being the break below support at 395 and the bull breakout being the breakout above the resistance at 407. It is really that simple, so trade the range between 395 and 407 until we get one of the breakouts. Now the other thing to pay attention to is we do have the bullish pivot off the support at 380, but we now need confirmation that it's a bullish pivot by breaking the resistance at 407. If we get rejected from 407 and we lose support at 395, it is going to be possible on the weekly chart. This is a double top from 407, so you need to keep all of that in mind, which means if you're staying bullish on this market, you need to manage your risk around this support zone between 395 and 396. Now jumping over to the daily chart of SPY, you can see we have the same exact resistance, which is between the zone at 407 and 408, and on the daily chart it is closer to 408, and that is exactly the target we reached on Friday before we started to see sellers coming into the market. Today we did go down on slightly increasing volume, but this really not high volume selling quite yet. But of course, the high volume selling could come at any point. The next likely support the bears need to break is down here below 398.5. And then we're getting more in line with that weekly support down here right around 395 to 397. So one thing you should take away from this chart is that the bulls have a ton of support below price action, which means we could find support anywhere between 395 and 399. That is a lot of support levels to work with, and we do have a bull trend in the short term. So you cannot rule out the bulls just because we're seeing a rejection from resistance. A lot of disciplined bulls were taking profits at resistance. So we do have two forces of selling. We have the profit takers and we have the bears shorting at resistance. So there is no surprise that we're getting a pullback in the short term. However, remember, it is just a pullback as long as we're above the rising support trend line and critical support. And it is only bearish if we start losing support. So I always tell you, get bearish at resistance and bullish at support. So right now we already had the bear step in at resistance and we're coming into support. So you're automatically getting a lot more bullish as we approach strong support levels. If we break the resistance, we're looking for 414 next. So just keep that in mind and trade the range until we get the breakout. On the NASDAQ 100 triple Qs, we were down 2.02% today. And again, we had the bear stepping in around that resistance at 294. Even though we did overshoot that level a little bit on Friday, it was more than likely just a short squeeze, and we did not get the second day of follow through. So you're instantly getting a lot more cautious at resistance, and then you're getting a lot more bullish as we come into support, which is going to be this gap fill and support zone right around 288. There are 3 support levels at 288, so there is very likely going to be very strong support. So if we lose that support, that is going to be very bearish. If we break below 288 on the triple Qs, you are automatically getting a lot more bearish for a retest down here at 280. And then below 280, we will be looking for that gap close at 273. So you can stay bullish above 288. And as long as we hold that support, we will very likely come back up here to retest the resistance at 294. And if we break 294 the second time, we're off to the races to fill the gap at 308. On the Dow Jones, we were down 0.75% today. And again, the Dow Jones is just building a giant triangle, which is a bull flag because we did get the bullish impulse off the double bottom lows. So very likely we're going to build out this flag before we get the next leg higher, which means we could come back down for a retest at 332 before we go any higher. On the way there, look for support right around 336 and 334. And if we lose support at 332, we're very likely coming back down to 327. The bull breakout will be above 341, and then we need to break resistance at 343 and 346, and then we should start on our way higher to 350. On the Russell 2000 IWM ETF, we were down 1.39% today, and we did close below that resistance at 188, but we did get 2 consecutive closes above that resistance. So there is a very good chance the bulls will try to push as soon as tomorrow and break back above that resistance. If the bears reject the bulls at 188, we're very likely coming down to about 185 to about 182. And if we lose 182, we have strong support at the gap fill just below 181. The bull breakout above 188 should start sending us higher to 195 and then 197. On the ARKK ETF, we were down 4.65% today, and we see the sharp rejection from that strong resistance at 40.4, and we're right back down towards the support right around 38. Below 38, we're coming back down to 34.6, but we are developing a bull trend the longer we can hold above 38. So use that as your risk level if you're trying to stay bullish in the ARK ETF. If you're bearish, you're shorting at 40 to 41 because above that we could start running up to 45. On the VIX, we were up 7.73% today, and the VIX did find resistance right there at 20, which is the level the bears want to see the VIX back above. VIX above 20 is fearful, which means the bears can start pushing lower, but while the bulls are in control, we expect to see fear remaining low, which means the VIX should remain below 20. So if we see the VIX spiking, you could get more cautious and more downside, but if the VIX gets crushed down below 20, you need to stay on this bull. On Bitcoin, we're currently trading just below 23,000, and we are seeing Bitcoin starting to roll over a little bit and starting to close below a negatively sloping 5 EMA, so Bitcoin is definitely running out of steam after this very impressive bull rally. Now remember, when we look at bull rallies, this is an impulse higher, which means even if Bitcoin starts to pull back, we are going to consider it a correction to the bull rally, which means it is likely after that correction, we will be getting ready for another leg higher, which overall is exactly the behavior you see in a bull trend. So on Bitcoin, you're staying bullish only while it's above 22,400, because below that, the correction is going deeper, which means we're very likely coming back down towards 21,000. The next strong resistance levels will be 24,000 and 24,460. On Amazon stock, we were down 1.65% today after we hit that price target on Friday at 102, and there's no surprise when we hit resistance that we can see some profit taking. It's only getting out of control to the downside if we lose support at 98, because below 98 we could come all the way back down to 93.5 and the gap fill at 90. The next bull breakout above 102 should send us higher towards 110, so you're getting a lot more bullish once we break resistance or as we approach some stronger support levels. On Microsoft stock, we were down 2.2%, and Microsoft is starting to pull back down towards that critical support level at 242, which is the exact level you need to manage a risk at if you're a bull. Below 242, we could come back down to 237 to 231, so you need to get a lot more cautious if we do lose that support zone. However, from 242, we could bounce back up to close the gap right around 247 and then get to our price targets at 252 to 255. On Nvidia stock, we were down 5.91% today, coming back down to the breakout of that resistance at 192, which means we are now testing that level as support. If we fail to hold 192 as support, we're very likely coming back down towards 179, and then below 179, we could come back down towards this 20 moving average at 171. If we bounce off 192, look for a retest of the high at 204 and the next price target higher at 213. On Tesla stock, we were down 6.32% after Tesla is just getting way too far extended outside that upper Bollinger Band, and we were coming into that resistance zone right around 182. So there's no surprise when we're getting this far overextended that we're due for a cool down. What I think is very likely going to happen in Tesla stock is that we're very likely going to need to go through some phase of consolidation, which means we're very likely not going to see a lot of directional movement in Tesla over the next few weeks. We're very likely just going to see some type of consolidation. So for that reason, Tesla is likely going to be contained between 183 down to about 155, and if we lose 155, we will be looking for the gap fill right around 144. So below 155, you need to get more cautious of the gap fill to the downside, but as long as we hold support at 155, we could continue to bounce between this trading range. Now, if we do somehow get a bull breakout above 183, we will be looking for that next price target higher at 196, but that is a big if because we are very overextended to the upside. On Apple stock, we were down 2.01% today, so Apple is starting to see a rejection from that resistance just below 147, but we're still above a rising 5 EMA, so if we hold 143, we could reattempt to break out from that resistance, but again, we have a negatively sloping 200 daily moving average just above at 148. Above that, we can get to 150 and then 156, and if we fail to hold the support, look for a retest of 141 to 138. On the financials, we were down 0.5% today, but we still have price action above all of the moving averages, and we still do have a bull trend, so the financials are still looking very strong at this time. The industrial sector was down 0.98%, squeaking out a close below the 20 daily moving average, but still above support at 99. The healthcare sector was down 0.9%, getting another rejection from resistance at 134 and coming back down towards the 200 daily moving average at 131. The energy sector was down 2.29% today, and we did gap down, so there's a gap to fill just above 91, and you can stay bullish as long as we're above support at 88.6. So jumping back over to the S&P 500, this is going to be a trading range week between the critical support and the critical resistance that I gave you, and then you're going to trade in the direction of the breakout from that trading range. Get bullish as you approach support and bearish as you approach resistance, because that is exactly how you trade a trading range. Don't expect a breakout, let the price action prove it. Once we get the breakout in the price action, we'll instantly know the next direction in this market. And remember never to get bullish at resistance, because that is where everybody is going to be locking in profits, and that is where the bears are starting to short at. Also, don't forget I have my own trade alert service called Bank Trade Alerts that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can find out how to join Bank Trade Alerts or learn more about it by clicking on the link in the description of this video. If you want to get more updates and analysis from me, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis and access to the members only videos. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.